The management of Berger Paints joining us now as well. So let's in fact, get speaking to them about really how things have shaped up this time around and what the expectation is going forward as well. All right. If I could just, begin by asking you, Mr. Roy, in terms of some of the key factors this time around, what really played out for Berger? What really contributed to some of the actually positive numbers that we've seen this time around on earnings?
Yes, quarter four was good for us. There were a few reasons for it. Some of them temporary, some of them permanent. One, of course, was the base factor itself. Last year we had a lower base in the month of March, so that helped to some extent. But there were three other reasons which were there. The industrial businesses started doing well in the fourth quarter, and they did quite well actually. Also coupled with that, the project business got bundled up towards the fourth quarter. Because the first quarter we had lockdowns, and then second and third quarter there was gradual movement in the market, and it all got bunched up towards the fourth quarter. But these were temporary. The permanent ones, we had a strong performance which we demonstrated in the premium luxury category, primarily the advertised products. We took two brand ambassadors, Akshay Kumar and Kareena Kapoor, and advertised a few of our brands which did very well in quarter four and is going to do well going forward. The other factor which was there was in terms of our expansion of the distribution network, especially in the upcountry market, where there is still some scope for improvement there.
Okay. Let's talk about the impact of the second wave on demand. What are the kind of trends that you've seen the April-May quarter versus the March quarter? If you can share that with us.
So April was good. Of course, we had a zero base, but even then, if you compare to last year, which is the right kind of comparison, we were on growth and a reasonably good growth in April. In the month of May, it was a shortfall against last year, and against last year as well, because half the country was under lockdown, and the rest was also limping along. So we had a little bit of a shortfall as far as May is concerned. June, as it looks now, a gradual opening up, we should be able to be close or exceed the last year figures. This is how it looks like as of first quarter. There will be good growth, of course, on a lower base. This is how it is as of now. But going forward, difficult to say. We will have to watch, how the economy pans out. There are some positives. The monsoon looks to be good. The demand should be back. Overall, the world economy is doing well. So after the COVID, typically it tends to bounce back. We had seen it last year in India. Probably the same phenomenon will happen in India as well. Yes, there was some cases of COVID this time in the upcountry areas. But as far as we are concerned, what we have heard and seen so far, it looks like that they will bounce back quite fast.
Okay, interesting to hear that. Abhijit, wanted to understand what percentage of your sales overall comes in from the rural end of the market?
That is something which we don't classify as rural or semi-urban or urban. We have the depot towns, which is the warehouse towns, and then we have the upcountry market. This is how we classify ourselves. So we really don't have like FMCGs, the absolute rural markets, because we need pakka houses, and the houses are mainly located in urban clusters, and then down the line into the upcountry areas as well. So it's a difficult call for us. We don't measure it in that way, but there is a substantial portion of our sale coming out of that upcountry areas.
The reason that I just wanted to gauge or get a sense at least is because, what one is hearing in the second wave is that even, the rural belt has gotten impacted by COVID, much unlike the first wave of the pandemic. So in that sense, would it really be a dampener for your sales?
This is what I said, that there have been cases there for sure, compared to first phase, but the numbers were limited, and it's not something which is very worrying. The news and the atmosphere around doesn't seem to be that it doesn't tally with the sort of feedback that we keep getting, that this time it may take time for the upcountry areas to bounce back. My feeling is that it will happen sooner.
Going forward when it comes to the premium segment in particular?
I couldn't get your question. Can you just repeat it, please?
No, just wanted to understand how the premium segment has done for you in the fourth quarter.
The premium segment did very well, as I mentioned. We did advertise, quite heavily in the fourth quarter. We took 2 new brand ambassadors as well, and there was substantial growth as far as the premium segment was concerned. Of course, it was also the fact that the first 2 quarters, there was less sale of premium segments and luxury segment products, and it started, getting postponed to the third and the fourth quarter. So a little bit of bunching up effect in the fourth quarter was also there, but overall the demand was good.
Good morning, and wanted to understand your outlook as well when it comes to the overall high costs, because they seem to have made quite a comeback. What exactly is your pricing strategy in order to negate the impact of this? Are you going to follow your peers, or do you have a margin range that the company is targeting?
So, we typically don't follow anyone. We obviously have our own strategy going forward. So we have taken a price increase effective 1st of May, and then we are going to take another price increase probably around July 1st, somewhere around that point timeline, largely because we need to see how this after the lockdown, how the demand pans out, and once we are very confident about that, then we need to take the price increase, which is the next one. On the solvent based products, we have taken the price increase in the water based products, which is covering most of the increases of raw material prices, but on the solvent based products we need to take up the prices soon.
Okay, fair enough. And what's the sense that you're getting when it comes to the rise in the input costs? Because the last 1 year has seen a V-shaped move in most of your input costs, from crude to HDPE and even for tin. So if you could just walk us through the kind of escalation that you've seen in the costs between Q3 to Q4 and now?
So what has happened is, the RM prices last year after COVID had fallen down to abnormally low levels, and that was not sustainable anyway. So it had started moving up, and it is back to pre-COVID levels. Some of them have gone up beyond that, largely due to temporary disruptions which happened in the supply chain. Some of it, in US, there were some issues in Texas, etc., where some of the factories had to go for force majeure closures. But they are all back in action now, and therefore some of the prices have started cooling down. Some are still at elevated levels, but they are near about the pre-COVID levels. So it's not something which has, yes, you are right that it had fallen down, and therefore it has recovered in a V-shaped formation. Wherever it is required to increase our prices of the end selling prices to cover this raw material cost, we are doing that.
Okay, so that's on prices then. Let's also talk about the new launches, the status there. Are you delaying any, due to the second wave? What the response has been to some of the more recent launches as well?
So whatever we had launched in the quarter four, we will continue to act on those and continue to advertise those products. As far as new launches are concerned, we have held it back a little bit because of this pandemic, and we would like to see how the demand pans out. Of course, the monsoon season is normally a low period for the painting cycle. And immediately after that, the markets tend to open up for painting in a much more aggressive manner. We may decide to launch those new products in the season, when it comes up probably from September onwards.
Okay, and what's your market share looking like now, Mr. Roy?
So in quarter four, of course, and last year overall, we did gain a little bit, from both the organized and the unorganized players. So the marginal improvement would have happened in the market share. It's still around that 18.5% in terms of market share in the overall market.
So, Mr. Roy, what kind of opportunity as well are you seeing in ancillary segments like waterproofing and paints going forward?
So waterproofing, we have seen very robust growth. It has been one of those areas which from the day of start of the business for us, it has been growing steadily, and we see a lot of future there, and therefore we continue to invest. We had also acquired one company called STP, which has also added more impetus to the waterproofing business for us. But as far as ancillaries are concerned, it's a small part of the business, continues to do reasonably okay. But mostly the waterproofing segment has been our growth churner for the time being.
We'll let you go on that note. Appreciate your time. Thanks so much, Mr. Roy, for giving us a sense as to what the outlook has been for Berger, the volume growth, the overall price rationalization, as well as your earnings. That's the view coming in on a Berger Paints.